26th, 2010 to order. I just want to say, just as chair's prerogative, to tell the audience at home that and my colleagues that we're looking forward to doing tough work at the city to try to deal with the city's budget issues, and I am honored to be serving on this committee with both of you to try to handle that challenge. And with that, we'll turn it over to item one to our finance director, Mr. Bob Samario, item one, Redevelopment Agency fiscal year 2010 interim financial statements.
Thank you, Mr. Chair and members of the committee. And first, just wanted to welcome all the committee members and new faces. It's good to see. We do have 3 items for today, and we'd like to maybe suggest, if we could, taking them just slightly out of order, we'd like to take the second item first. But with each of these items, what we like to do is, since we have new committee members, maybe just spend a little time just talking about what the reports are, what they're supposed to say, maybe even how to read them, just some introductory stuff. So that will give some context, and then we can get into the meat of the report. I'll be talking about the city's interim financial statements, and then Mr. Bossi will get into the RDA, and then Jill Tara, who is our treasury manager, she'll be talking about our investment report, but also giving backgrounds for each of those reports. So I'm going to start with the city's interim financial statements, and again some background, and just so you know that the reason we come to council every month is because we're required to by city charter. It actually indicates there that we are to provide on a monthly basis a report to council on where we're at with our revenues and expenditures in relation to budget. It's sort of a status report. How are we doing throughout the year? We're also required by city charter to provide an annual report, and we'll talk more about that. But in addition to the monthly reports, each year we have to come to council with a report that says here's how we did for the entire year, no longer sort of a status, what are the final numbers. Our current practice for how we meet those requirements is we come to the Finance Committee each month, and we are here primarily to answer questions. On a monthly basis, we don't have any prepared report. It used to be that in the old days we would only have these as a consent item on the calendar for the city council meetings, and we wouldn't come to Finance Committee but on a quarterly basis. But at the request of one of the committee members, Mr. Horton, Roger Horton, he asked that we bring these reports to the Finance Committee so he can have ask his questions. Typically he would come to the Finance Department and ask those questions, but sometimes he didn't get a chance to, so he would ask us to bring these. So that's why we come here to the Finance Committee on a monthly basis. But again, they're brief reports. Again, answering questions. It's really an attachment that we include. It's what you have now on your agenda packet, which is sort of the statement that shows all the individual funds and where they're at in the current, through November of this current fiscal year. But on a quarterly basis, we actually do a more expanded report. We do and have been coming to the Finance Committee and Council to give an expanded report. We, in fact, include a narrative analysis in what you see in your packet that explains the numbers in narrative terms. So we do some analysis about where we're at, why we may have some variances, what we're projecting for the year, but it is a little more comprehensive on a quarterly basis. If you can go up a little bit. And then for the mid-year report, which is a quarterly report that goes through December 31st, this is when we come to council and do an extensive analysis, and it's more so than we see in the first quarter, particularly because after one quarter, not a lot has transpired. Hard to really say what's going on. You can see on small variances only. But at mid-year is when we come to council and we talk a lot about where we're at with our revenues. A lot of focus is on the general fund. But we also talk about enterprise funds. But it's also at this time that if we see any unusual variances or suggest or have any recommendations to adjust the budget, that's when we'll do that at mid-year. Typically, we have a pretty good sense by that time of where we're going to be into the year, and we'll make adjustments. And I suspect that this coming February, as part of a mid-year report, we will have some adjustments that we'll recommend in light of the revenue news we've been getting and data that indicate to us that we're going to be below budget by the end of this year, even beyond what we saw when we amended the budget back in November. And then lastly, just to let you know that the last report we do for the quarter ended, really is for the year ended June 30. It's the same report, except we just are dealing with final numbers, as I mentioned. This is no longer sort of a status. Here's what they are, and here's how we ended the year, and what the impacts are on reserves. And then lastly, later in November, right around Thanksgiving, we have to have all of our numbers audited by an independent CPA, a certified public accountant. It's required by the charter. And so they spend several months here looking at our numbers, and they help us prepare comprehensive annual financial report. It's a big document. It's probably about 200 pages long, and it shows essentially our financial position, how we ended the year, with a lot more detail, but it does include an auditor's opinion as to whether the report is fairly presented. So that's just sort of the background. If you could turn to the interims for the city on page 1, and just kind of a little bit on how to read the statements. First, what you'll see in the header is that
For people's information, this is item 4 in the packet, right?
Thank you. Thank you. So the first thing you'll see on the header is that, again, these are interim financials or statement of revenues and expenditures. So we're not looking at, the assets or liabilities of each fund. We're just looking at their revenues and expenditures, budget and actual, through a period of time. And we indicate that this is for the 5 months ended November 30. So every month, of course, it changes. And what's also helpful that we put in here is you'll see a percentage next to that last line, which says, in this case, 41, up to the top, Jill, 41.7% of the fiscal year. We put this here, and by the way, this happens to be basically the number of months that have expired divided by 12 months in the year. So in this case, it's 5 divided by 12. And that gives you some perspective and context as you look at the numbers to say, well, okay, we're 5 months through the year, then we should see sort of revenues and expenditures trending along the same lines, at least in general. And we'll talk more about that, and you'll see how it relates to those percentages in the far right in terms of how revenues and expenditures are doing through November. So you can see on this first page, page 1, this is a summary by fund. So it lists all the funds that are presented in more detail in the later pages. So this includes all funds, and then later you'll see individual funds with more detail. And the important thing to note about this is that it doesn't include all of the funds that we have in the city. It only includes what we call our operating funds, the general fund, our water operating fund, and wastewater operating fund. What it doesn't include are the capital funds. And our capital budgets, we have extensive amount of monies budgeted for capital programs, and they're not reflected here for one simple reason, and that is that when we budget for those projects, we budget on a multi-year basis for the full life of the project, and it could expand 2-3 years for construction. And so the budget you would see may be $3-4 million, but we're comparing it only to an annual sort of number for how we did this year. And so it's really not a good apples-to-apples comparison because we're comparing a multi-year budget to an annual amount of expenditure or revenue. So that's really why we don't include the capital budgets in this report. We have all the detail if you ever want to see that. And I would say the only exception to that is you'll see when Mr. Bossi speaks with the RDA, we do report on the capital program there because of the nature of what they do. It's primarily capital related. So that's the only exception. But here you won't see capital projects or capital funds, but you can always come ask us about those and see how we're doing if you have particular questions. So that's an important point to remember. And then just again, just going across the top, you'll see that we have the annual budget, and that is the amended budget. So anytime we amend the budget throughout the year, like we did in November, it'll be reflected in that column. And you can see it just presents for each fund one line for revenues and one line for expenditures. In the back, you'll have a lot more detail, but it just summarizes the budget and where we're at through November 30, 2009 in this case. So through the year-to-date actual, we call that. Question? Sure.
Bob, on the
Mr. Francisco.
If you look at so obviously the one kind of standout number up there is the actual year-to-date revenue for the general fund, which looks like it's about 25% below the projection. And are there any bumps, like a semi-annual or annual source of revenue, that might make that look not quite as dire as it does?
Mr. Francisco, that's a great question, and I'll mention that in a moment. I'll get into some of the things that you have to kind of pay attention to and how you read these, because as I indicated, the 41.7% assumes everything is straight line, but there are some things that will cause that to be different because of different variances or seasonal adjustments and the like. So I'll mention those in a moment. So again, revenue and expenditure, then you'll see a line just below those two lines for each of the funds that say addition to / use of reserves. The difference between the amount budgeted and the year-to-date actual represents, theoretically, the budgeted use of reserves. So in the case of the general fund, we have revenues of $103 million, $69,000, expenditures of $103.2 million, and this indicates that we have more expenditures budgeted than we have revenues budgeted, and therefore we're anticipating the use of the reserves. And in some cases, or in most cases, I would say that those reserves are by design planned to be used for capital. As you look down below for water operating fund, that you can see expenditures exceeding the revenues by $3.2 million. In large measure, that negative number is the planned use of reserves, and for the capital program they have a multi-million-dollar capital program each year that they typically fund from reserves. So they recognize that all their operating revenues aren't going to cover those costs. They're going to come from reserves, and that's what that indicates. In some cases it's not, but in most cases it is. And then when you move to the right, you can see that now that number no longer means the use of reserves, because in the year-to-date actual column for the general fund, you can see there's a $10.7 million variance, and that's just mostly speaks to the timing of our expenditures relative to the timing of when we receive revenues, which aren't the same. Our expenditures are pretty consistent month to month, particularly in the general fund where we have primarily salaries and benefits every month, whereas the revenues tend to be more seasonal, as Mr. Francisco alluded to. So you'll always see a variance there. So in that case, you don't want to interpret that to be the budgeted or planned use of reserves. That's just the timing of cash flows in a sense throughout the year. The next column is the encumbrance column, and that creates a lot of confusion for a number of reasons. But let me explain to you what an encumbrance is. Throughout the year, we basically will order supplies, order services, and we do that through what's called a purchase order. And that purchase order is a legal contract or a binding contract. We've ordered services or goods from a vendor, and we are obligated to pay on that once we receive those goods or services. Until we receive the goods and services, we haven't incurred any kind of expense or liability, but we have a contractual obligation. And we create these encumbrances primarily for budgetary control reasons. If we are, particularly during the end of the year, as we are consuming our expenditure budget, it's always helpful to know not only how much we spent year to date, but how much have we already obligated through these purchase orders that will eventually be spent before year end, typically. So that when we go to buy something else, we'll know that we've already got that much consumed and what's really left over. And again, it really comes into play at the end of the year when we're close to the budget and we have these encumbrances set up. And in fact, in the system, our financial management system, when somebody goes to issue a requisition or a purchase order, if there aren't sufficient funds available when you conclude how much has been spent to date and the existing encumbrances, it won't let you enter that requisition. It'll control it essentially at a major, what we call a major object level. And so it requires special approval to make sure that, we know what's going on and we are going to have sufficient funds. But that's what those encumbrances are for. So it's really for budgetary control purposes. And it is a good measure for us when we compare to actual and budget. It is a good measure where are we at as of November 30. In this case, we've spent, for example, $42.9 million, but we've obligated almost $1 million more than that. So the remaining balance that we can spend, that's unobligated, is $59 million through November 30 or as of November 30. That encumbrance number, though, can tend to, when we talk about sort of what are some things that can affect the percentages here to date, encumbrances can do that, particularly when we get into our operating funds. Because as you can look down below, the water operating fund, they have $2.8 million in encumbrances. That's a lot of money that will tend to skew that your percentage of budget, through November 30. You can see they're 41.1, slightly ahead. And the reason for that is, again, these purchase orders, not only are they for just an ongoing thing we do throughout the year, but at the beginning of the year, particularly these larger funds, they'll execute what are called blanket purchase orders. And they'll execute them on July 1, and they represent what they expect to use from that vendor and buy from that vendor for the entire year, because it's repetitive things. Supplies, chemical supplies, for example, we purchase not all at once, but throughout the year. And rather than sort of issue an encumbrance every time we do that, we issue one blanket for the full year's amount. And so when you see that, a number in there, well, of course, it's a year's worth of encumbrances, but we're showing that being fully, in a sense, encumbered as of November 30, and it particularly looks odd when we were here reporting August, the month of August, because, we have these big encumbrances, and you go, geez, we're 60% expended only 2 months of the year, and it's because of these encumbrances, particularly the blanket encumbrances. So it's something to really pay attention to. And then lastly, to really speak to your question, Mr. Francisco, revenues, for the most part, do not come in on a straight line basis. And a good example of that is in the general fund, where we see property taxes, for example, coming in December and in April, May timeframe. Two large payments of about $10 million each or $11 million each. Obviously, when we get before November, you'll see that our revenues aren't tracking according to budget on a straight line basis. And then all of a sudden, we see these big payments coming in December, and then January looks like we're doing really well. So that's really what you have to pay attention to, particularly the general fund. But it's the same for other funds. The water fund, it's really seasonally impacted. As revenues tend to come in more in the first half of the year when we have the drier season, the drier months. But then later on, second half with the winter months, particularly this winter, we're likely to see the revenues start to wane a little bit. So it's just not a straight line sort of a
Mr. Samara, in my experience on the Finance Committee, the best measure of how our revenues are doing is looking at previous year's figures by that month. So if you wanted to look at how we're doing in January, you'd look at last January and the previous January and the previous January, because that is comparable information.
And what we do as a result of this, on a monthly basis, these monthly interims, we don't do anything more than just present these, but on a quarterly basis, as I indicated, the report is accompanied by more detailed analysis, a narrative analysis, and in that narrative analysis, a separate attachment, we do adjust essentially our budget for these seasonal variances. So we actually look at the prior 3 years' revenues, for example, the general fund through November, and how much revenues actually came into that period. And we essentially assume that to be our budget for the year. And so that gives us a good benchmark because, it doesn't make sense to compare to a budget or a straight line number. As Mr. Williams indicated, look at the prior year and we look at 3 years back for the same, to see what the trend has been and what do we expect after 5 months throughout the year in terms of revenues. And we do that for not only the general fund's revenues, but also our enterprise fund revenues. So the quarterly report's a little better in terms of saying, okay, let's make this so it's really comparing apples to apples, and we've adjusted for seasonal variances. And we should see pretty much that we're on track. And if we're not, then it suggests that there's something going on. So with that, if you could just turn to the next page, to the very first page that still shows the general fund. So that was just a summary by fund. I just wanted to show you how much detail we do present for each of the funds, starting with the general fund. So in the previous schedule we saw for revenues is one line item, but here, it's the same fund, general fund, same period of time, through November 30, we have all the details of those revenues, and we have by category: taxes, licenses and permits, fines and forfeitures, use of money and property, etc. And the ones where, we tend to see the most seasonal variances is in the taxes category, particularly property taxes. But even with those seasonal variances, I could tell you, as you've probably been hearing from the news that you've gotten from Ms. Tara on just recent data for sales tax and bed tax, that a large part or a portion of that unfavorable variance through November is a result of what we've been seeing in the last several months. And you'll see that more in January, of course, when you see the December report in January, you'll see those numbers substantially below where we're budgeting on a straight line basis. So again, each fund is presented here in detail revenues and expenditures, and we don't have a plan, as I indicated, we don't have a planned presentation to talk about all the variances or just individual funds. We're here to answer questions, but we just wanted to give you this sort of background on how to read the interim financial statements. And again, for something for you to consider, whether it's something that you also want to have brought to you on a monthly basis, to go over these things, and also really to be available to answer questions. Historically, prior to 4 or 5 years ago, we would, as I indicated, not go to the Finance Committee, but on a monthly basis, we would go to Council. It would be a consent calendar item, and only on a quarterly basis would we come to the Finance Committee and Council to make an extensive report. But until we're told otherwise, we'll come here every month and we'll talk about these interims and be available for questions. So with that, we could answer any questions and then turn it over to Mr. Bossi to talk about the RDA.
Are there any questions from committee members?
No. Okay.
I do have one question, which is the Fleet Replacement Fund, which is on page 2 of the report. I guess my basic question is, given that we are facing lower revenue than expected, but we seem to have been making the expenditures in the Fleet Replacement Fund sort of as if it's a typical year, partially by using the amount of monies that we have in reserve I'm wondering sort of if you could report back to us whether that is something that is possible to scale back for the remainder of the fiscal year.
Sure, and I don't think I would point out, Mr. Chair, is that you might recall that when we adopted the budget for this year,
Oh, yes, I know
council
that
took
that was
measures
part of our
to
balancing strategy.
reduce that beyond what we had already reduced it by in the recommended budget, and council reduced it by about $370,000 more, and that's reflected in these numbers. And so, but certainly we can take a look at that.
Yeah, I'm not suggesting that we should take that money anytime soon. I'm just suggesting that we may want to
Sure.
stop spending it in the same pace that we have been doing so,
Okay.
if it's possible, and what trade-offs there are because if we or as a result of taking that move, if we make it. That's my only other question, Mr. Samaria. So I
Okay.
suppose we should take item 1.
Right, and then I'll turn it over to Mr. Bossi, our redevelopment manager.
Good afternoon, Mr. Chair and committee members. I'm going to run through the redevelopment agency interim reports with you. Similar to what Mr. Samaria was saying, we don't formally or come with a formal presentation. We do answer or do our best to answer any questions you may have, either regarding dollars and cents, or maybe you just want a particular update on a project. Along those lines, I should also let you know that we do produce a quarterly status report for you. This was given out the first week of your terms here, so a couple weeks ago. And what this does is it just goes through and gives you a real quick update on all our capital projects, where they are in the project phase, as well as where they are financially. And so, again, comes out quarterly. Feel free to call me with any questions you have or concerns or anything, anytime. We're happy to answer this for you. The setups for our interims are similar to what Mr. Samaria was saying, but we're more of a project-based review. And what I can do is run you through those. If you'll look on, we can start with page 1. This is our general fund, what we call our 111. So it's our general fund, supplies and services and things of that nature. Same setup as Mr. Samario indicated. And that's really about all for there. Then if you want to turn the page over to the housing fund, and again, I'll run through these and feel free to ask any questions. Next is our housing fund. That's our affordable housing fund, and it also includes other supplies and services as well. A lot of administrative issues there, or funds. On the next page, page 3, this is where we get into the capital program part of the redevelopment agency funds. This is our capital projects fund. And you'll see over on the left, the projects listed out. They're listed in accordance with a number of sections. And we did this a few years back to help you realize where these projects are in the process. And it helps us significantly, too. So it goes from everything to a finished project to the projects in construction phase, the design phase, the planning phase, on hold status. So those are the various topic areas you have. So that can kind of help you out as to, if you have a question about a project, you'll find where it's at in that project phase based on these interims. So that's our 311, or our capital projects fund. The next two funds on pages 4 and 5 are our bond funds. So you'll see on page 4, this is our Series 2001A bond fund. And again, down the left side, you'll see the different categories of and then the projects listed in there. You will see projects listed quite frequently on a number of these funds. There may be a project like the Carrillo Recreation Center that, because of the amount of money it took to put together that project, it might have some funding coming from one bond fund and the other bond fund. And quite often, I think actually with the fire station, we had money set aside in each of the different accounts. So don't think that we're double dipping or doing the project 3 times. It's just one project that we had to split up due to funding. And then the final page, page 5, has our Series 2003A bond fund projects. And again, down the left side, you'll see the different projects and where they are in the project process. One thing, or a couple of things I do want to let you know to keep in your mind when you are reviewing these interims, especially with the redevelopment agency, is that number one, they are a few months back, so this one's for November 30th. So if you see something and think, we just approved a construction contract 2 weeks ago, why isn't that listed here? Just remember that, again, it's a snapshot of November 30th. And so consequently, some of the projects where they are in the project phase may be a little off, meaning it may show here that it's in the design phase, but when reality today, in today's time, it's actually in the construction phase because over those last 2 months, it moved up. And then the other thing is on some of the projects, you will see over in the remaining balance or percent of budget, 0%, or basically no money has been spent on that project. That doesn't mean we're not working on that project. Redevelopment agency staff, especially in the early stages of projects, we're working on all of our projects at different levels, but our rate is not charged against the projects themselves. This is for the construction component of the projects. Our funding comes out of what you see on the first page. So it may say no money has been expended. That doesn't mean the project's sitting on a shelf and we're not doing anything about it. It does mean we're moving forward. And so I'm happy to answer any questions you have about that as well. So, and with that, again, I'm here to answer any questions you might have about dollars and cents, projects, programs.
Is there any questions for Mr. Bossi from the committee members?
Yes.
Mr. Francisco.
Thank you, Mr. Chair. Brian, just so I understand what this category is, the finished category in projects, what exactly does that mean?
That is supposed to mean that that project is completed. And oftentimes what you'll see is we put it up in that category. Let's take on page 3, you'll see fire station. Oh, no, that's actually in construction.
On page 5.
You might see it as finished, but what happens is we'll move it up into the finished category, meaning all the construction work is done, the site is cleaned up, the project is essentially over, but it may have a remaining balance. And what we have to do is go through, make sure the public works staff does this for us, goes through the project, make sure everything's been done appropriately, and so there's a delay in billing for that particular project. There may be a couple $100,000 left in it, but that's just because we want to make sure everything's done, and then we'll do the final invoices, and the project will actually be complete, finished, out the door, done.
Okay, so when you say finished, you mean as far as RDA is concerned, you believe all the work is done, but you haven't got a final certification?
True.
Okay.
Yes. Yeah.
Okay. Thank you.
Any other questions? We actually should do a motion to accept the financial report, if I could get a motion.
So moved.
Is there a second?
Second.
All those in favor, please say aye.
Aye.
Aye. Opposed? A motion to accept passes.
Okay.
And we will end our day with the investment report. Jill Torra. Ms. Torra?
Good afternoon, Chair Williams and committee members. I'd like to welcome you to Finance Committee. I'm Jill Tara, the Treasury Manager, and I'm here to present the December 31st, 2009 Investment Report and Fiscal Agent Report. But before I begin the regular presentation, I thought I would explain for the benefit of the new committee members as well as returning committee member Chair Williams, the basics of the city's investment program and the rules under which we operate. So our city's investment activities are highly governed under state law, as well as the city's annual investment policy, which is adopted each year by council. It comes to Finance Committee for your review and comment. We discuss any changes to the annual policy, and then you forward it to council. That also delegates the investment authority to the finance director, as well as myself, for the day-to-day operations of the investment activities. The investment policy sets out the purpose and the scope of our investment activities and starts with the mission statement, as you'll see up on the screen. And I did want to note that I passed out the overheads for you, which are a nice snapshot of a summary of the key points of our investment policy. The mission statement of our investment program is to invest public funds in a manner that will provide maximum security, adequate liquidity, and sufficient yield while meeting the daily cash flow demands of the city and conforming to all statutes and regulations governing the investment of public funds. As you'll see in the mission statement, there are 3 words that are bolded there: security, liquidity, and yield, and those describe our day-to-day investment strategy, which I like to call our SLY investment strategy. It's an acronym for safety, liquidity, and yield. And we look at these investment objectives in this order. First of all, when making investment decisions, we look at the safety or the security of the potential investment that we're looking at. And we have this as our number 1 investment objective, to preserve the base principle of the overall portfolio by investing in safe securities as well as diversifying by both issuer and type of securities. And Bob, you want to go to the next slide? We also have a buy and hold strategy, so we get the best rate that we can at the time, but we hold it and therefore preserving and not subjecting our portfolio to any market losses. But up here you'll see the permitted investments that are allowable under our investment policy, which in some cases is more restrictive than state law. And we like to be extra conservative with our investment portfolio funds. Primarily, while you can see all the different types, I'm not going to go through each type, but primarily we invest in the safest securities that are listed up there, which are the U.S. Treasury notes, the federal agencies. We do have a few corporate medium-term notes in our portfolio, although we're not buying those now just because of the recession, and companies that were once ironclad and strong may not be so now. So we're really shying away from those now. You'll see down about 3/4 of the way down, there's certificates of deposits. We have some of those in our portfolio. We also have bank deposits with the Santa Barbara Bank and Trust, where we have a banking service agreement for our daily banking operations. And the last listing is what we call LAIF, which is the Local Agency Investment Fund. And that's a pooled investment fund run by the state. The state also puts their money there. Our money is constitutionally protected there. And it's really our overnight money. So when we don't have a daily need for cash, we'll send it up to LAIF. And if we do have a daily cash, when I do the cash reconciliation every morning, we make a call to LAIF by 10 a.m. and they wire our money right to us. So it's really a nice way to pick up some interest and not leave excess funds in our bank account. The LAIF pooled investment fund is subject to the same permitted investments under state law as our own portfolio, so they are the safest, highest rated. You'll see the minimum rating on the right-hand column, and we're limited to A or better. Bob, you want to put up the ratings? I put in your packets for you a summary of the bond ratings. For our securities in our portfolio that are subject to rating, bonds and notes, they must be rated A or better by 2 ratings agencies. And the ratings agencies that we use are Moody's and Standard & Poor's. And you can see that everything above the red line there is what we buy. As a practice, we don't buy anything less than AAA rated. Although in some cases, like the corporate notes, and I'll go through the portfolio listing, there have been some downgrades, but they're still well within the investment minimum rating of A. And when that does happen, when we do have a ratings change, we report those to the Finance Committee and Council on a quarterly basis. And unless it would really drop, we wouldn't recommend selling it. That test is done when we purchase it. But in the event that something dropped to junk bond status, we would come and Council would have to give us authorization in order to sell something, because our strategy, again, is buy and hold to maturity. So after we ensure that any potential investment that we're going to purchase conforms to our first investment objective of safety, we then look to liquidity, and we look at a portfolio ladder, or I'm sorry, a maturity ladder to see when our existing holdings will mature to ensure that we have enough cash flow to meet the daily operations of the city. So once we've ensured that we have enough cash for operations and that things are secure, then we turn our attention to yield and say on a given day we have a maturity and we're looking to repurchase into our portfolio, then we'll look, okay, what's the best yield we can get out there that fits with those security and liquidity objectives. So that's the hierarchy of how our investment strategy is made. And I'd like to go through the reporting requirements. Now, on a monthly basis, we come to the Finance Committee because the Finance Committee is delegated the authority to review the investment reports. You hear the report from staff, have an opportunity to ask any questions, and then you forward the report to the council consent calendar for council's acceptance. So every month we come and we simply list, give you a listing of all the securities in the portfolio. We list all the investment activity, that's all the individual transactions we made during the month. We also include the interest earnings for the month and give you a snapshot of the holdings and the market value. On a quarterly basis, we give a little bit more information, which includes everything that we provide on a monthly basis, but we also provide a lengthier council agenda report and presentation noting any noteworthy items like credit downgrades, market value changes. We also give a summary of overall economic conditions, which recently the Finance Committee has been very interested in, when are the signals that the economy is going to turn around. And we talk about any future possible changes in the portfolio and our ongoing strategy. So that's the basic overview of what governs the activities that we do on a day-to-day basis. And I thought I'd walk you through the investment portfolio listing, which you'll get each month in the investment report, and show you how to read it and take this opportunity to see if you had any questions about it, because it's a lot of listings and a lot of numbers. So this report and has the date of the report, and again, I'm here to present the quarter-end report at December 31st. On the left, you'll see the description of each of the securities that we hold in our portfolio. And up at the top, we have our LAIF holdings. You'll see the next category down are certificates of deposits that are held in the portfolio. Then we get to the federal agencies, and I think I mentioned that that's the bulk of our portfolio. The first that are listed, you'll see, say, Federal Farm Credit Bank. You'll hear those referred to as FFCBs. On down, you'll see we also have holdings of Federal Home Loan Bank. You'll hear those referred to as FHLBs. On the next page, we also hold a fair number of Federal Home Loan Mortgage Corp. Those are Freddie Macs. And below that are holdings of the Federal National Mortgage Association, which are Fannie Mae's. And these are notes issued by all the federal agencies, which are backed essentially by the full faith and credit of the U.S. government. So very safe. Down below, you'll see that at the end of December, we held 5 corporate notes. Berkshire Hathaway, a GE, Toyota Motor Corp., and 2 Wells Fargo notes. And at the very bottom, you'll see the Santa Barbara Airport promissory note, and that's outside of our 5-year maximum, and that is a specific loan from the investment portfolio to the Santa Barbara Airport, to our city's airport, a 20-year note for the quick turnaround rental car facility. And so we took market value about what they could take it out if they were going to do a bond issue on that, and we lend it to them ourselves and got 7% on that. So that's outside of the maximum 5 years that we're allowed to. But again, we're allowed to veer from that policy as long as council approves it. Now, if we stay on the investment report, or on the investment portfolio, I just wanted to discuss the different columns across the top. So we have the securities categorized by type, And the next two columns show the purchase date and the maturity date. We typically buy in the 3 to 4 year range to ensure that we get the best yield. The longer you go out, the higher yield you get. And as long as we keep doing that, we ensure that, you know, our securities that are 4 years old, as those mature, we buy again in the 3 to 4 year range. But there is a 5-year max with the exception of the airport note. The next two columns show the quality rating, the current quality rating for each of the securities. The next column over where it says stated rate, that's the coupon rate at which the different securities are yielding when we buy it, which is different from the next column over. It says yield at 365. That's the actual yield to maturity. That tells you how much we're actually going to earn on each of the securities because it factors in whether we bought a security at par value, which is just the principal, just paid the straight principal price for it, or whether we bought it at a discount or a premium. So if you look at, you're on page 2, the first listing there, the Federal Loan Home Bank, you can see the stated rate is 4.375. That means the coupon rate is 4.3. But you can see the yield to maturity is 2.2, which would have been the best we could get at that time, the 2.272 yield at 365. That means we bought that security at a premium. So we paid more. We get less than the stated rate, but it was comparable to what was available in the market that day. Any questions about that? Okay. The face value is the stated face value on the coupon. It's how much we'll get once the security matures. Book value factors in the interest and whether we paid a premium or discount and what the value is held on our books. And the market value shows what that same security is selling for in the current marketplace, and we do a market valuation at the end of each month. Again, you'll see in that book gain or loss, there may be a gain, there may be a loss, but we'll never realize it because, again, we hold everything to maturity. However, we are required to report on that, and so we bring it to you. The last column, the comments, show whether the agencies that we hold, whether they're bullets, which means we buy it and we hold it until it matures, or callables. And callable means the issuer has the option at a specific date or number of dates to recall that if the market rates go lower. And they can call that security and we'll get our principal back along with any interest due for that period. So that just tells you, as an internal policy in this low interest rate environment, we adhere to about a 30% of our portfolio as callables, expecting we buy as a short-term alternative to LAIF. LAIF's earning about 0.59%, I think, right now. And so it's a short-term alternative to LAIF. We'll buy a callable, expecting it to get called in 3 months or 6 months or 1 year, whatever call protection. And we usually like to get the longest call protection we can. So that's how you read the investment portfolio. And again, that's in there each month. And lastly, on the quarterly basis, we also present as an attachment in the report to Council and to Finance Committee, a listing of the cash and investments held at fiscal agents. And those would be the bond agents for our bond issues, as well as the trustee for the old police and fire service retirement fund when we used to run our own safety retirement fund. So you can see the cash listed there, and it's merely a report for the committee's information. So that provides some background, and if there are no questions about the general part, I thought I'd go into what would be the normal part of a quarterly investment report.
Any questions on general concepts?
No.
No.
Okay.
So I think we're finally in a quarter where analysts and experts are saying there are positive signs of economic recovery and the economy is no longer contracting. GDP finally increased after 4 quarters of declines. Was the third quarter GDP increase was 2.2%. That was attributed to growth in personal consumption, exports, and of course the federal stimulus spending, which stimulated the economy. The December GDP is not out yet, so we always report that a quarter in arrears. During the quarter, you'll see on the first page of the investment report, Treasury yields moved higher. As the economy improves, investors tend to get nervous about inflation and will therefore look for higher, or will move to investments. I'm sorry. As the Treasury prices decline, it moves the yield higher, and that's moved as we have, as a larger supply of Treasuries come to market, investors will be looking for the higher yield on that. The CPI for December was basically flat at 0.1% growth, so there wasn't any immediate fear of inflation, and the Fed therefore kept the interest rate, the federal funds rate, unchanged at its all-time low of 0 to 0.25%. And the Fed funds rate is the rate at which banks lend to each other on an overnight basis so they can meet their minimum reserve requirements at the Federal Reserve Bank. Countering all this, where the analysts say that this will continue to be a long and protracted recovery, unemployment remained high nationally in the 10% range as of the end of December. Up above, you'll see the chart on the investment yields, and we put this in every quarter to report on how our portfolio did to other benchmark measures. The city portfolio at the end of December, that's the top line, was earning 2.735%. The 2-year Treasury, the next line below, was at 1.14%. LAIF at the end of December was 0.57%, and the 90-day T-bill, although we don't usually buy it, it's something like that, was 0.05%, so very, very low. You see the steep yield curve between the 90-day and the 2-year, and it gets even steeper as you go out longer. So, turning to page 2 on your council agenda report, I just wanted to summarize the activity over the quarter. We had $14 million in purchases this quarter, $4 million of which were 2 CDs that we purchased at Montecito Bank and Trust. One was a rollover of a 1-year CD, and one was a new 2-year CD, both in the amount of $2 million. We had $6 million in agency calls this quarter, and $4,345,000 in agency maturities, the CD that I mentioned that we rolled over, as well as a semi-annual principal payment on the airport promissory note for $86,339. They make interest at the end of December, principal and interest payments semi-annually at the end of December, and then again at the end of the fiscal year. And with that, I'll move into what is part of our regular monthly report as well as the quarterly report to talk about our activity and income for the month of December. On the left-hand side of the first page of attachment 1, you'll see up there shows the investment activity for the month of December. We purchased $4 million in federal agencies, an FFCB and a Fannie Mae, and we also made LAIF deposits, $4 million to the city LAIF account and $8 million to the RDA account. Both of those corresponded with the large property tax payments that we received at the end of December. During the month of December, we also withdrew $8 million from city LAIF for operations and purchases. We drew $3.5 million from RDA LAIF for operations, and we had the semi-annual pay down of the airport promissory note. Over on the right-hand side, you'll see a summary of the interest revenue during the month. Interest on the pooled investments, including the interest on the securities that we hold, our bank account interest and the amortization, as well as LAIF interest, totaled $351,020 for the month of December. For the RDA, the interest of the cash balance held at LAIF was $11,382 for total interest on the overall portfolio of $362,402. page 2 of the attachment we bring to you each month, and you can see at the end of November, the total cash and investments held in the portfolio was $160,999,000. At the end of December, the portfolio overall balance was $166,314 million. That consisted of $45.1 million held in state life in both the city and the RDA accounts, the 2 certificates of deposit for $4 million, federal agency issues at $96.8 million, and our 5 corporate medium-term notes at $10.2 million. In addition to those outside securities, you'll see the $7.2 million airport promissory note. And we also, at the end of December, had $2.86 million in our bank account, which is our cash for operations at Santa Barbara Bank and Trust. The total $166.3 million. The yield to maturity and the difference between what we earned on the portfolio in November and what we earned in the portfolio in December was a decline of 1.6 basis points. And you're going to see that decline over time as our higher yielding securities mature or get called, and we're replacing them still in this low interest environment at a rate lower than what they're maturing. The average days to maturity on the overall portfolio lengthened a bit as we replaced some securities to 605 days. And when you factor in the 20-year promissory note to the airport, the average days to maturity is 893. And with that, I'm happy to answer any questions about the earlier part of the presentation or the activity for December in the quarter.
Do we have any questions from committee members?
No, thank you.
Not for me.
Seeing none, can I get a motion for A and B acceptance of the investment report and the fiscal agent report?
So moved.
Second.
All those in favor, please say aye.
Aye.
Aye. Opposed? Motion carries. We do need to return actually to item 1. We did not do a motion to accept, or item 2, since we took that first. Which is the interim financial statements, which you have reviewed for the first 5 months. That's the item that we took first in the packet. It's agenda item number 4. We did not do a motion to accept, so I'd like to take that back up and entertain a motion.
So moved.
Second.
All those in favor, please say aye.
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 Aye. Opposed? Motion carries. Is there anything further, Mr. Samara?
No, and thank you all very much.
Great.
And welcome.
Thank you.